what we do in this construct of seasonality, rather than doing a 5-year measure, the way Bloomberg does, we do a 10-year measure and we detrend the data. That is to say, we take out the influence of whether the market's going up or down. So you're really just looking at the influence of the individual months. And the purpose of doing this is to have this seasonality indicator as a complement to the valuation models of the S&P 500 and the XJO, which are in the same part of the quarterly. So you can look at these two influences and how they interact together. Market seasonality, amazingly, has absolutely nothing to do with the weather. Probably that's a shame, but it's really all about the ends of financial years. And there are 3 financial years which influence the XJO in Australia. And they're the British or European financial year, which ends in March, which is the end of that's about 6 weeks away. And the Australian financial year, which ends in June. Australia, like a whole lot of countries which were British Commonwealth countries, which are east of Suez, have the financial year ending in June. And the US government financial year, which ends at the end of September and finishes and begins on the 1st of October. So these 3 interact, and their influence upon Australian seasonality really has been how our market has internationalised and how the influence of those various markets play out. So with the British financial year, which is the first one, what tends to happen is interestingly, for the S&P 500 and XJO, the market tends to fall from now to the end of March. Why is Britain still important? Well, it's the 3rd largest holder of US treasuries in the world. And the amount of US treasuries held in the banking system is only slightly less than that of China and has increased dramatically over the last 10 years. So it still has, the City of London still has enormous influence. So the first low is in the end of March. And then the market tends to rally, and our market rallies to a peak at the end of July. What used to happen was that our market would fall at the end of June when, of course, people want to sell stocks that they don't want to own at the end of the financial year, and then it would stay low. But what's happening now is, in terms of the XJO, is the market kicks strongly in the period of the beginning of our next financial year, which is July. And in fact, our seasonal peak every year is at the end of July on average. The US market goes up at the same time, which is probably why we're sustaining the rally at that time. But it goes up in July and in August. Both those markets, both the XJO and the S&P 500, then decline as you go into September. And in fact, the decline in September is overwhelmingly the sharpest decline of any month in the calendar year. Why has that happened? Well, because it's the end of the US government year, financial year. As that's the time when companies are paying tax to the US government, have to meet their tax payments. It's the one quarter in which, incredibly enough, the US government makes a surplus in that quarter every year. And that drives the market down to its seasonal low, both in the US and Australia. And what you then get in the US is a very strong kick, which actually peaks the market for the year at the end of November. Why does the market run up in October and November? Well, because it's it's the beginning of the US financial year, and it's the one quarter every year that the US always runs a budget deficit. And of course, that budget deficit is bigger now than it is at normal times. So what you've got is you've got, and the possible trades that this provides are most importantly in Australia is the selling at the peak, which is the end of July, and buying back in the end of September. On average, that produces a 4.4% fall in those 2 months. Selling at the end of July and buying at the end of September gives you a 4.4% as a beneficial trade. And there's notes on these you'll see in the quarterly when it comes out, and indeed in the slide which will go with the video of this. In terms of the US, though, you could perhaps sell in November and buy back in March, the end of March, but that's a very long time, and there's probably a lot of other things you should be trading. The S&P 500 does fall by 3.2% over that period, but probably the best annual trade in the S&P 500 on the basis of seasonality is to buy at the seasonal low at the end of September and sell at the seasonal peak at the end of November. And in doing that, for those just holding for those 2 months, you'd make a gain of 3.5%. So in each case, the best trade in the Australian market is to sell at the end of July and buy at the end of September, whereas in the US market, you'd buy at the end of September and sell at the end of November. And that's all the trading advice I'm going to give on the basis of seasonality today. If you want to look at more, look in the corner.